hi, Narelle from our team. Thank you for
Welcome,
joining.
Narelle.
Hey, Narelle.
Yeah, thank you so much, everybody, for coming. We really appreciate it. So I'm Shay Hata, for those of you who I don't know. We are here talking about the 10 things you must know for buying in 2021. I have my fabulous business partner, David, who's on here as well. And then one of our favorite lenders, Chad Lubin with Summit Funding, is on here.
Thank you for having me, guys.
Yeah, we're excited that you're here. We really want to make this as interactive as possible. So if you can please type any questions you have in the chat box, we want to answer those as we go. So as we're introducing ourselves, the first thing I'd love people to chat in and put in the chat box are any questions you were really hoping we were going to answer today. So, what drew you to coming here? What was it that you wanted to know? So please type those in the chat box now, and then that way we can make sure that we answer them throughout the presentation. I'll be monitoring that chat box as well as we go. So as you type in questions, I'll be asking them of all of us on the panel. So quick introductions, and then we'll dive right in. We're going to try to keep this short. We know you all are probably zoomed out. So we're going to keep this to 30 minutes or less. So a little bit about myself and David. We run the Buy, Sell, Love Chicago team here in the Chicagoland area. We're one of the top teams in the area. I think this past year, we helped 160 families buy and sell homes. We did about 56 million in volume. We have a small team, so we work with 3 other agents as well, and we work all around the Chicagoland area. So we're based in Lincoln Park. We do a lot of business kind of in that, Lincoln Park, Lakeview, West Loop, Wicker Park, area kind of up to Rogers Park and down to South Loop. But we also help buyers and sellers in the suburbs as well. I moved to Wilmette about 1.5 years ago, so I know the North Shore really well. David grew up in the western suburbs, as did Lauren, who's on our team. So they help our western suburbs buyer. And then Narelle, who's on our team as well, has literally lived everywhere, I think, in the Chicagoland area. So he knows everywhere like the back of his hand and can help people all over the place. David, I'm going to pass it to you if you want to introduce yourself.
Sure. Yeah, thanks, Shay. Shay said we partner together. We're definitely a very interactive team. There's definitely been a move to a lot of teams in real estate lately. One thing that we've really been able to maintain is we're still very collaborative. You definitely are getting multiple brokers working with you. So you really get a lot of expertise. And I think between the two of us or whoever else on the team you're working with, you're going to find really a wide range of experience. I'm a condo dweller. Shay is a single family home person. We both own both types of properties, and we've also gone through a lot of renovation projects. So we've made all the mistakes for you. So we just basically, we're going to tell you what not to do, and you'll do well about that. So between our team members, I think we actually offer experience and sort of background that you may not get from in a typical buying experience, and that's what we enjoy. There are a lot of people who are a long time in the business that really just want to sell. We really like to keep our feet still spending time buying. It's very gratifying, and it also helps us really keep a good foot in knowledge of the business. So that's one of the pluses to our team. And one of the other great things we have is our partnerships. And one of our most important partnerships is with Chad Lubin, who really is one of our go-to lenders and has really helped us grow. So welcome, Chad.
Thank you, guys. I appreciate you having me. And I think they are underselling how good they are and how much experience they have. I work with 60 realtors across the Chicagoland area. And gosh, I can't think of any that come up to the point that Shay and David does. They're just so fantastic with their clients. They're always available, just give the best advice. And I always measure people by if they do the right thing when no one's looking. And I always see Shay and David just do the right thing for their clients. So that's just an endorsement back to you guys.
Well, we appreciate it. And with that, let's jump right in. We have a lot of content to get through. So the way that we formatted this is kind of 10 questions that we get a lot from buyers. So the first one we're going to start off with is, how's the market? And how has the market been affected by COVID? So, if we go back to kind of give you a quick history, starting last January and February, so January, February of 2020, we saw the busiest housing market that we had ever seen. So there were lots of multiple offers for buyers. It was very competitive. Spring market here typically starts about March-ish, and it started much earlier last year. Then obviously the pandemic hit. Most people didn't want to go out for showings. So, things went, kind of south for a little bit in terms of everything just stalled. People didn't want to look for showings. People didn't want to put in offers, et cetera. We were all figuring out this new normal. Then buyers really started entering the marketplace about May. Once people started to wrap their mind around the fact that this was going to be more of a long-term thing, this wasn't going to be an 8-week pandemic, and people started to realize that maybe they didn't have enough space or they didn't love where they lived and they wanted to start to make a move. So at that time, we saw the market get really busy again. And what's been really interesting to watch since then is different portions of the market have done better than others. So in particular, a lot of people have left the downtown market. So if you're a buyer and you're looking in the Loop, you're looking in West Loop, you're looking in River North, Streeterville, Gold Coast, you're probably going to be able to get a slightly better deal than you have in the past, because a lot of those people have looked to move to other parts of the city or leave the city entirely. So we've really seen the suburbs be on fire. For the most part, we're finding multiple offers in the suburbs. It's very competitive. Most properties, especially single families, are selling for over asking price. Here in the city, it's a bit of a different situation. So condos are struggling a little bit, either being on the market longer, especially studios and one bedrooms, because so many people are looking for more space now. They need a home office. Maybe they have kids who are e-learning. So those 3-bedroom condos and bigger have become more popular. So, you're probably going to get a little bit of a better deal right now on a condo. If you're looking for a townhouse, those are pretty steady. Price wise is what we've seen. They're still appealing to people because typically they're more space and you have a private entrance. The properties that have really struggled are high-rise properties, where all of the amenities are shut down. Buyers typically aren't wanting to share elevator space with other buyers, with other people, walk through lobbies. So, if you're looking in those high-rise buildings, you're probably going to get a really good deal. The low-rise buildings, still a little bit better of a deal. Townhouses are still competitive. If you're looking for a single-family house in the city, those are very competitive right now. There's a lot of interest in single-family houses, again, to have that private outdoor space, that private entrance, more space, etc. So that's just kind of a quick overview of what has happened in the market. I know, David, you put together some slides as well. Do you want to talk about these?
Sure. And these slides, we've got 2 slides just talking about the market, just giving you a sense of, overall, the market was up last year in terms of volume. I mean, despite everything that happened in COVID, we were up. Our brokerage was up 22% over the previous year. I mean, it was an insane year. Shay said, though, there are segments that are having a tough time. If you wanted a 1-bedroom condo downtown right now, this is the best time to be a buyer. So when we talk about the market and whenever we start talking and hopefully working with you, we want to look and ask, where's the market in sort of a segment? But quickly, just looking at these markets right here, we've got the number of new listings. And you can see if you go all the way to the right, that right now, the new listings are actually lagging what we had last year, probably about, it looks like about 10%. So there's less inventory on there right now, which is not surprising. Anything we've seen that we've had some listings that spilled over from last year, they've all gone under contract because there's very limited inventory right now. And then the next slide, you can see that actually right now we are actually up in terms of contracts up. If you look especially and this goes all the way through yesterday, we had a huge spike in terms of units under contract. This is year over year. So the market has definitely started out strong. We're going to see what continues sort of going into February. This is usually a slow ramp up month. It's definitely gone up quickly. So it's an interesting year, a quick start to the market. So that's sort of going across Chicagoland, as Jay said, more in the suburbs, but we're definitely seeing this in the city and pretty much in all markets.
And I would say, with that, if you're thinking of buying, I would start to do so sooner rather than later, just because there is a little bit less competition right now. And we are starting to see the market heat up. I think by the time we get to March and April, we're going to see a lot more multiple offers, and it'll just be a more competitive market regardless of where you are. So I would say jump in sooner rather than later. Chad, what are you seeing in terms of, contracts coming across your desk, pre-approvals, et cetera?
Yeah, well, it's funny. David and I had this conversation this morning. We are double what we were last year as far as contracts coming in the first 2 weeks of January. So, I think we've all made this fictitious deadline of after the Super Bowl, right, in Chicago. And it's really because we worked so hard during the year. We kind of want a month or 2 off, right? And no one wants to go out when the weather's terrible. But we're just not seeing that this year. It is people are getting pre-approved. And I know we'll talk about it later, but I think a lot of that is realizing that these interest rates are at record lows and that could be coming to an end here towards the beginning of this year. And I think that's driving a lot of people off the fence as well.
Absolutely. So that leads us to kind of the next question. If people are thinking that they want to buy, how should they know that how do they know that they're ready to get a mortgage? Chad, do they need to have a certain amount of money saved? Student debt paid down? What's your kind of advice for people for knowing when they're ready to buy?
Yeah, I think too many people overanalyze when that time is. I just always tell people there's no better time to look than now, and it doesn't mean you have to buy right now. I think it's best to get on the path, and maybe that path is 2 years for you. Maybe it's 2 months. Right. I think it's better to plan the further out you can so you know what you have to save, you know what you qualify for, or better yet, you know what you have to work on to maximize the loan you can qualify for and minimize the interest rate. What happens, and I know you guys have both seen it, is sometimes people get going and they get going really fast. And if they would have checked and started with me 3 months ago, 4 months ago, before they started looking, we could have had a quick credit fix that would have got them a better interest rate, or allow them to qualify for a better loan program, or have less private mortgage insurance. So I think the sooner you can start, the better. A good rule of thumb, I know there's this obsession to put 20% down. That used to be what was required back in the late 80s, even into early 90s. And I think some of that comes from people thinking you have to put 20% down to avoid private mortgage insurance. So there is a premium that you pay when you buy a home if you don't put 20% down, called private mortgage insurance. But it's become so cheap of late that it's not the big expense that it used to be. So I find people come to me, they're often surprised with how cheap PMI is right now.
And when you say cheap, can you give us an example of, on an X amount of loan, how much PMI would be?
Yeah, like I got off a meeting right before this. Someone looking to put 15% down instead of 20% down. They have a 540 loan amount. They had an 801 credit score. It was $72 a month for them to have PMI. So they decided, hey, I'm just going to keep this extra 5%, right? And I'm going to use that in the stock market and get a better return. Or I'm going to have a higher cash position because there's some things I want to do to the home once I move in that I'd rather attribute that money towards.
Perfect. So I think that at the end of the day, talk to us as soon as possible, even if it's 2 or 3 years before you're ready to buy, so that, especially Chad can give you some tips for increasing your credit score to get you a better interest rate, and help you get your finances in order. So next question, this one's for you, Chad. How much money do people need to buy a home? You said people don't need 20% anymore. Do they need 15%, 10%? Can you explain kind of how that works?
Yeah, I mean, you can have as little as 0% down if you're a veteran and you served our country. So there are VA loans where you don't have to put anything down. You can get a conventional loan for a first-time home buyer with as little as 3% down, and then FHA is 3.5% down. So both David, Shay, and myself have worked together behind the scenes to work with what you have, right? We've had buyers that only put 3% down and we're able to get the seller to pay their closing costs. So, we've had deals where someone buys a $300,000 home, puts $9,000 down, and that's all they have to bring to closing, right? And I think it's important, if you can put at least 3% down, that's going to give you the best level of interest rates and really maximize your buying power.
So that takes us right into the next question. What is going on with interest rates? Where are they now? And if you had to predict the future, which we won't hold you to, but what do you think is going to happen with them?
Well, hey, I think, politics aside, our president that's going out of office right now had a very heavy hand on the Federal Reserve. Whether you agree with it or not, he did push on them hard to keep mortgage rates low. They did that through buying mortgage bonds, right? And they've been pumping billions and trillions, being the biggest buyer of mortgage-backed securities. So not to get too technical, but that's what sets interest rates. So the government has been supplementing this low interest rate environment by the Federal Reserve owning a third of our mortgages. So I just don't see how that can continue. And I think when I hear President Biden speak, that's not where his interests lie right now. I think he's got some other things on his agenda that he thinks are more important. So I think we have a good 90-day window here where they're going to remain artificially low. I always say you never know the bottom of a market or the bottom of interest rates until you start to see an increase. And we have started to see that increase the last 6 out of 8 days. So the last 6 out of 8 business days, we have seen rates go up.
And what, can you just give people an example of kind of where interest rates are right now? Most of our clients are doing a 30-year mortgage. So what are you seeing for interest rates for those?
Yeah, so there are 6 things that make up your interest rate: your credit score, your down payment, your property type, your loan amount, what loan program you're doing, and how long you're locking in the interest rate for. And the most important out of those things is where's the market at? Where are mortgage bonds trading at? So we've kind of seen that best case scenario, 20% down, 800 credit scores, single family home. That's been anywhere from 2.5 to 2.625. Right now, that's around 2.875 to 3%.
And what if people have, what if people on the call currently own a home, and they're thinking maybe they won't buy for a year or two? Should they be looking at refinancing with you right now? I know I just refinanced with you at 2.35% for a 15-year. So thank you. That was awesome.
Yes.
So if they're at a certain amount, like if they're above 3.5, should they be looking at refinancing? Any guidance for people on that?
Yeah, I think anything under 3.75 you should take a look at. And gosh, I know we spoke to a few people and they said, hey, we're 2 years away from buying a new home. And we've taken a look at it and they've decided to buy now instead of wait that 2 years because they didn't realize how much more purchase power they had with these record low interest rates. So the average interest rate over the last 10 years has been 4.375. When you can get a 2.75, that just buys you a lot more home. We've looked at some that it's $70, $80, $100,000 more in purchasing power to keep their payments where they're at right now. So when people see the effect of that, we have had several people say, hey, I'm just going to go look at this new home now.
And we've
got a quick question here. It's a little bit more on the investment side, but while you're speaking, someone's asked, are there any newer types of loans beside the typical FHA, USDA, VA, et cetera, loans for investment properties?
Just your typical conventional loan. I would say that is the market that has struggled the most through COVID, that I've seen the most lending changes on, is investment properties. Jumbo loans, that's loan amounts above 548, 250 now. That has really struggled through COVID. They've taken a lot of fairly aggressive investment property programs away. So that has changed for the worst.
And for quickly on investment properties, if somebody's going to buy an investment property, what do they need to put for a down payment? Because I know it's different than if you're buying an owner-occupied property.
Yeah, that's a great question. It's 15% down on a conventional loan. And that's one unit. So if that's a single family home or a condo, it's 15% down. That gets larger by the amount of units. So on the multifamily side, it can be 20, 25% down when you get into the 3 and 4 units.
Perfect. Okay. So when is the best time to buy? David, do you want to take this one?
Well, I love this. I've never quite heard this that way. I mean, as Chad said, it's right now is the best time to start. It's not necessarily the best time to, it's not always the best time to buy. So I think really this is going to be this is going to be a really personal decision because there are a lot of individual factors. If you're currently leasing, we'll talk about it, that sort of thing. It's going to depend sort of on personal factors. In terms of the market, you're looking at, we're going to see probably peak inventory. As we've seen, it's been lagging a little bit. We're expecting to see peak inventory sort of going sort of mid-February into March, maybe up until April, and then it's going to slow down. So you're going to see the most properties on the market. You're also going to see the most buyers at that time. So don't get panicky about thinking I have to buy in this sort of, this 12-week window. But that's sort of, if you're sort of timing it and wanting the most options, that's what's going to be out there. There's going to be more competition, but it's also, I mean, if you look, there are new properties. We had new listings we were putting on the second half of December. So there's always new inventory. I think you should start the process, start seeing what's out there, because also everyone has a different tempo. There's some people who go out, first time they're out, they see 5 properties and they put an offer in on one. Some people need to be more methodical and really get a sense, especially if you haven't pinned down exactly your geography, if you haven't decided exactly what sort of you have in terms of your wants and your needs, that could take a little bit longer. So in terms of buying, you're going to buy when you're ready. We're going to help get you there. I think especially by having a pre-approval. Something the Chad's team is really great is just doing a real consultation and sort of looking 360 at your finances and figuring out what works there. So basically having all the tools in hand to buy as soon as you're ready and you see something.
Yeah. And I would add to that, you may not be ready to buy for 2 years, and that's okay to start that search now and find that right property. I think as we kind of talked about earlier, if somebody's looking for a studio or a 1-bedroom, now is probably the best time to buy for the next maybe 8-9 months while COVID is still going on and things haven't gotten back to normal, because those properties are going to struggle more to sell. If you're looking for a single family house in the suburbs or in the city, that's probably going to be tough no matter the time of year for the next year or so, until things open back up in the city. So it also depends slightly on where you're looking to buy and what type of property. You're probably going to get slightly better prices in the winter, but as David said, you're not going to have as many inventory options either. So there's really a lot of factors to look at for that question. All right, let's hop to the next one. So what's it like to look at homes during COVID? Is it safe? So I'll start with this one, and then David, you can chime in. We have definitely figured out a lot more than we did last March. So, what a lot of people are doing now are what we call touchless showings. So sellers are leaving all the lights on, they're leaving closet doors open, and they're asking you not to touch anything. So you do have to wear a mask at showings. Some sellers are asking that you wear gloves or use hand sanitizer before you come in, and most are requiring we take off our shoes or wear booties. So it seems very safe. We've never had anybody contract COVID from a showing that we're aware of, or anything like that. Same precautions are taking place at inspections, final walkthroughs, etc. We are limiting the number of people, so we're asking just the people who are making the decision to buy, come, your immediate family. Please don't bring cousins and aunts and uncles to the showings and things like that. But it feels very safe now. I think everybody kind of has this under control in terms of what to do. We are also offering for our clients, we're happy to FaceTime you through a property or Zoom you through a property if you don't feel comfortable coming in person, or make a video. We've had, some clients, especially in the beginning, want us to do that. David, anything you want to add on that question?
Yeah, and I think something we've also seen, we've done on our listing side, we do a lot more video and material beforehand. So it really is eliminated. The number of showings people have had to do before making decisions has dropped, I'd say 20%. Because right now, we look at our listings, we now do a virtual Matterport 3D tour on everything. So you really can get a much better sense of sort of floor plan and sort of the layout on that. Also, we also do a walking tour, sort of going through, and we're not the only brokers who do this. So there can be a lot more, you can avoid a lot of unnecessary showings by taking advantage of that. So when we're going through the buying process and sort of looking at properties with you, we'll definitely point out, if you're looking at something, you might want to check this out beforehand to see if this is a good match. And if so, we'll definitely see it. If not, you've saved yourself a showing and decreased the number of properties you need to tromp through.
Absolutely. So next question, what do I need to do now to get ready to buy a home? I think from our perspective on the real estate side, it's, start to figure out what you want, start to make that list of how many bedrooms, how many bathrooms, and really check out neighborhoods in particular. If you're looking at maybe suburbs you're not familiar with or neighborhoods you're not familiar with, go drive around them and see if you like them. Look on, Truly has great crime heat maps. If you're looking at a neighborhood and you want to know about the crime, we always recommend going there. Chad, for you, in terms of getting ready to buy a home, what do you need to know from people?
I think there's two things you need to be prepared with. Documentation. So know you're going to have to prove your down payment through your bank statements or your investment account statements. You're going to need to have your pay stubs, your W-2s, and your tax returns ready. So know that you're going to be asked for that and have it organized. And I think it's always good to have an idea of the monthly payment that you think you're going to feel comfortable with. So build out a budget. I think financial health is living your life in thirds. A third of your money should go to living expenses. Third of your money, unfortunately, goes to the government for taxes, and you should try and save a third of your income. So if you can build out your monthly expenses and see what you would be comfortable with, I think that's a good ratio to kind of start with. And most people can afford about 3 times their annual income for a home. So if you can come prepared with that information, it'll just be an easier conversation with us and you'll have an idea of what you can afford.
David, anything you want to add to that one?
And I think sort of the one thing on the front end is really doing a good needs and wants assessment. That's sort of how we start. We always start off our process with a buyer consult, spending about half an hour to an hour going through. Just as Chad on their side, they do a mortgage consultation. They look at the financial aspects of things. We're going to be talking to you sort of about lifestyle. Like right now, people are upsizing a lot, sort of figuring out how much space do you need, not just bedrooms. What kind of workspace do you need? Our pets in the future. Spending some extra time, and we actually have some great questionnaires. We'll share those with you in a follow-up. Spending some time and really assessing what's going to be important to you will save a lot of time. I mean, you always, when you're out, you're going to explore, and that you tend to evolve in that. But spending some time in the beginning actually is a good investment.
Absolutely. So what things do I need to know about the buying process? So, for the buying process in Chicago, it is a little bit different from other areas. If maybe you've bought in another state. Some kind of interesting things here are we have what's called earnest money payments. So we have 2 earnest money payments. So after you go under contract on a property, what's going to happen is you would drop off a check for about $1,000. That's your first earnest money payment. That allows you then to go forward and do the inspection. And then if you find something in the inspection that you're unhappy with, you can cancel the contract, walk away, and get that $1,000 back. In fact, in Illinois, you can actually cancel the contract for any reason during the attorney review process. You don't even have to provide a reason. So it's very easy to get out of contracts in Illinois while you're still doing the negotiations on contract changes and inspection items. So that's very different from most other states. Then from there, if we're able to wrap up the inspection negotiations, there's a second earnest money payment that's due. So that's usually about 5% of the purchase price if you're putting down more than 5%. So that's due about 2 weeks approximately after you go under contract. All the rest of the money, the rest of your down payment and your closing costs are going to be due at closing down the road. So that's, I think, a thing that always surprises people is that we do have a chunk of money that's due upfront in the process. David, do you want to add anything onto that?
I just want to say, and just remember that earnest money is applied to your down payment.
Correct.
So what if you're putting down 5%, it's going to be whatever you have from that. So that's money that's also going through, and just sort of having that ready. There are a lot of individual steps, and this is a good thing about, and the important thing about having a broker you work with. There's a lot of little parts to the process, and that's what we do. I mean, we'll help you anticipate these sort of steps so you can sort of focus. One thing to bear in mind, typical timing from the time you sign a contract and it's accepted to closing is 45 to 60 days. So as you sort of think of what, if you have a lease that's coming up or something like that, you kind of want to work a little bit backwards from that, probably throwing in a couple of weeks of buffer just because things come up. So that's sort of an important thing. So if you're thinking, oh, I'm going to be 45 to 60 days from the time I find a house, start thinking about how long it's going to take for you to look. Are you going to be someone who's going to do it in a month? Are you going to take 3 months? So I think those are kind of rough timings. That's an important part of the process. You're also going to be having, in addition to a lender and a broker, you're also going to be having an attorney who's going to be looking at certain aspects of the process. And that's an essential person who really is going to look not just at, if it's a condo, there's going to be a little bit more review of documentation and things that are going on there. But they're also going to be reviewing and sort of helping you understand the mortgage documentation, just so they're understanding. And that's a person who is your advocate. Another, one of you have sort of 3 key players who are on your side. So they're an important part of the buying process. You tend not to interact with them until you're under contract, but that's something. And as with all these things, these are resources we're happy to share.
Chad, anything you want to add?
I would say the lending process is 5 steps, right? Get with us, do a consultation. I love Shane David's consultation. It's very important to do that with us. You'll find a home, you'll come back to us and do your loan selection meeting. That's where we go over all the exact numbers of your loan. You choose one of them, we'll make a recommendation, we'll start the process. There's underwriting the loan. We'll ask for a lot of documentation. You'll have to get approved by an underwriter. There is the clear to close. That means you're ready to schedule your closing. Then you'll sit at a title company with your attorney right now. Typically, none of the rest of us are there. Unfortunately, we are in non-COVID times. You'll sign a lot of paperwork. You'll bring in your money. You'll get the keys to your new home. So our process is about 5 steps.
And I would add on to that, if you don't feel comfortable with COVID going to the title company, you can also request a curbside closing right now. So you can actually do the closing in your car and not have to interact with anybody. So, for every portion of the process, there are a lot of COVID friendly options, depending on your comfort level of being out and about. So this kind of ties into what David was talking about. How early should I start looking? How much time before my lease ends? So, as David said, 45 to 60 days is the average number of days from contract to close. So, that about 2 months is what you're going to want to plan once you're under contract. So you really should start looking at least a month or two before that. So about 4 months before you really want to move. If you're looking at a hot market, like if you're trying to buy a single family house in the suburbs, I would say add on another month or two to that, because you're probably going to be in multiple offer situations. You may lose out on a couple of properties before you get under contract. So you want to add that extra buffer time, and you don't want a situation where you only have 30 days to find a property and then you're feeling stressed. You want to have as much time as you need to really look and find the right property. So that could be a year for you. So, the earlier you can start, the better. And I don't think you can start too early. Even if you're not ready to go do showings, we can still put you on an MLS search so you can start to get educated about the market online. And then when you're ready to do showings, we can take you out. David, do you want to add anything to that?
I think you both covered it. Just want to point out, we're sort of going into our final minutes here. If anyone has any questions, please type those right now. We're going to wrap up probably in about 4 or 5 minutes, but we will definitely stay on to answer any questions. So please don't hesitate to type those there. And you can also email us. You'll have all our contact info. So don't hesitate to reach out either way.
Mine's 6 months. When people ask me that question, I say start 6 months before. That should give you enough time.
That's a good rule of thumb. So bidding wars, we talk a lot about bidding wars. We've mentioned several times potentially being in multiple offer situations. David, do you want to explain what that is and our strategies for our clients to win those bidding wars?
Sure, we love bidding wars. We like winning. We're competitive folks, and as we said, inventory is sometimes there's just not as much inventory. And especially these days, when you find a property that sort of, as people are moving to larger properties, so if you're moving to single families, if you're moving to larger condominiums, if something is updated, there's going to be a lot of demand for that property. People who are not as willing to do projects, people don't want to do projects right now. They don't want to deal with the hassle. So those are the sort of properties you're going to see in the suburbs. You're going to see that a lot more. So if you have multiple parties who are putting in an offer, at that point, generally they'll come back and they'll say to us, we're looking for the best and highest. So we're looking for, so at some point on Monday by 10 o'clock. So in terms of that, obviously price is the most important to most sellers. They're going to want to have the person come in who's going to have the highest price, but also terms are going to matter. If folks haven't found a house yet, they may want a 90-day close. So part of that process, in terms of a bidding war and how to win, is actually having a broker who's going to do a lot of research. We try to find out when we're on showings, trying to figure out what's going to appeal to the seller the most. One of my favorite stories about this is something Shay did. Found out that sellers were huge Cubs fans, and when we could go to games in person, Shay's actually got some very, very hard to find Cubs tickets, and that was sort of one thing that won in the bidding war. But we also have some really good strategies in terms of getting the price. And also, it's not just necessarily that you put in a single price. You also can do an escalation rider. We can tell you a little bit about more than that. So it gives you a little bit of adjusting. One of the things is the tool we use that a lot of other brokers don't use is we use our mortgage person. Something when, it's Sunday afternoon, we're putting in an offer. We send a message to Chad. Chad, we're making an offer. Could you please make a call? And Chad will make a call on your behalf, talking about how financially solid you are and trying to make you stand out. Because when a seller's sitting, they're just looking at offers, it's all numbers. And anything we can do to sort of distinguish you is going to make a big difference. One thing that also appeals a lot can be a buyer letter, sharing your story, especially when you've got some people offering the same amount of money. Anything to distinguish yourself is going to be is a plus. And we're definitely, we love helping people sort of through those steps. But the lender thing is something that it shocks me that more people don't do.
And Laura and I just won a bidding war this morning on a property, a single family house in the suburbs. There were a bunch of offers on it. We came in at the same price as somebody else, but we won because of our buyer letter. It was very compelling, and that's what had to make them choose us over the other people, even though it was at the same price. So there's a lot of different strategies we can help you with if you're in that situation. So we want to be respectful of people's time. We did go over a few minutes. We'll stick around. If you do have questions, please put them in the chat box. We are happy to answer those for you. As we wrap up, Chad, anything else you wanted to share with people?
Yeah, I would just say on that last comment, like your team does matter. My reputation with a pre-approval letter in the market matters. Shay's reputation as one of the top realtors, David's reputation, your attorney, the team that you select matters. The pre-approval type you get matters. There are level 1 pre-approvals, which most of the banks will give you and the online lenders will give you. I think they're crap. There's no validation on them. I wouldn't accept them as a seller. If people aren't asking for your documentation, if they're not asking to do a review and have a consultation with you, the process is going to be harder for you at some point. And I think that's when miscommunication happens on the deal. So a lot of communication from the beginning is just super duper important in my opinion.
Absolutely. David, anything you want to say as we wrap up?
No, I think we've gone through a lot. I mean, I think one thing that is really helpful, you know, you may encounter people out there who are only buyer's agents, and a lot of them are fantastic. One thing that we found sort of doing this, Shay and I, through 20 years, the two of us, we do a lot both on the listing and the buyer side. And one thing we found is that we actually represent our buyers a lot better because we were working with sellers, and we sort of know what works on them on that side. So sort of looking at these, looking at sort of the situation and being able to advocate for you and position yourself better, that's something I think is definitely a plus, and services we're definitely happy to provide.
And our contact information is on the screen. So if you have additional questions, please feel free to reach out to any of us. We also have a lot of great resources on our website, which is buyselllovechicago.com. So if you go to the buyer section there and you click on the steps to buy, there's about 32 steps that take you through the entire transaction from, you know, deciding you want to purchase a property all the way through closing. Each of those is very detailed about exactly what happens in that step. So if if you have more questions, again, we're happy to answer them, but you're also welcome to go to the website. It is a great resource for information. So thank you all so much for coming. We really appreciate it. Have a wonderful evening, everybody. And please reach out if we can be of help at all.
Thank you, guys.
All right, thank you. Bye, everybody.